Tesla is still incredibly affordable. There are no other mega cap road stocks with 30 to 35% volume growth trading it at 40 times profits, and that trend will only continue. You can see EV adoption skyrocketing in California, where it is currently 177%. There are a lot of catalysts coming up in the next few months, like Investor Day, the first quarter, Cybertruck, and some sort of FSD single stack product that will improve that, mega packs, and so on. It makes me think of the end of 2019 as we were looking into 2020 with all the catalysts coming in the finance and electric vehicle industries. China is 22% of the world's EV adoption, and Tesla is the best way to capitalize on that. We are unveiling the Enigma piece by electrifying piece today. This is not your typical stock news. It is a revelation that will challenge your perspective. There are moments that send shockwaves through the market, and among those moments is this financial titan with insights that could change the landscape of Tesla and beyond. Yeah, it's pretty good. He is dropping knowledge bombs that can change the course of history. Engage your intellect and spark your creativity. Keep checking back as we explore the data, insights, and prospects of electric vehicles, Tesla, and the foundation of the financial industry. Are you prepared for the moment when we reveal a revolutionary revelatio? And from finance guru Gary Black, that has the potential to completely upend the investment world and transform Tesla and the EV sector? Join us as we unravel his insights, uncover the enigma, and investigate the implications for both investors and enthusiasts. Stay tuned for an adventure that will test your thinking and spark your creativity. Make sure to like and subscribe to our channel first, because this is not your typical stock news. It's a revelation that has the potential to alter the path of history. You won't want to miss this Tesla stock news event. Let's begin. Elon Musk's ambitious plan to introduce a $225,000 Tesla model within the next 2 to 3 years could be a game changer. The electric vehicle industry is becoming more and more competitive, and many EV manufacturers are finding that their market position is being gradually eroded by the increased competition. It is possible that some of these companies may be completely edged out of the EV market in the not too distant future. Currently, Tesla offers its Model 3 at a post-rebate price of $32,000, which is already lower than the average price of conventional internal combustion engine cars in the United States. While we accelerate EV production, let's focus on a growing earnings alert pertaining to Ford. Because the company's revenue and profit fell short of forecasts, its shares have suffered. Jim Farley. Given the declining demand for EVs in the US, Ford CEO has been highlighting the company's continued commitment to prioritize hybrid vehicles. It's important to note that they missed their revenue and profit targets in the third quarter, and that one of the contributing factors is the ongoing issue of warranty costs, which continues to pose challenges for Ford, along with the impact of the UAW strike. Tesla currently holds an undisputed position as the leading American EV manufacturer, a stat that is likely to persist despite the difficult market conditions. While Tesla has been expanding its EV fleet and scaling up production, many other EV manufacturers are finding it difficult to keep up, with some of them even considering quitting the competition entirely. Today, we'll examine why several automakers are modifying their EV sales projections and the possible ramifications for Tesla and its stock. While when analyzing Tesla stock, people wonder if the company should be classified as a tech company or an automaker given its projected $100 billion in revenue, which is growing at an astounding 4% annual rate. This six-fold revenue multiple also seems justified, and Tesla continues to be profitable and maintains a competitive edge in manufacturing and over-the-air software capabilities, areas where other businesses find it difficult to match its skill. And the main question is whether Chinese manufacturers, with their affordable battery technology and manufacturing processes, can challenge Tesla's dominance, given its world-leading production facilities and its rapid over-the-air software updates. However, not all automotive giants are enjoying equal success in the EV market. Notable companies like Toyota, Ford, and GM recently revised their EV sales forecast for 2023 and beyond, citing various challenges and uncertainties. This shift could have significant implications, potentially bolstering Tesla's competitive advantage in the already crowded EV industry. What are the reasons behind these automakers' decisions to lower their EV sales projections? Environmentally friendly technological advancements and government incentives are driving the widespread popularity of EVs among consumers. The global semiconductor shortage is one of the main reasons why some automakers have revised their EV sales projections downward. Fit Solutions claims that this shortage has had far-reaching effects, disrupting the supply and production of essential electric vehicle components. For example, Toyota, a major player in the automotive industry, has been forced to make significant adjustments to its EV sales forecast, cutting it by nearly 40% from 20 to 0, 0, 0 to 1 to 300 units. This significant reduction is a reflection of the difficulties faced in the Chinese market, where the semiconductor shortage has made the already difficult situation worse. This chip shortage has had a significant impact on EV sales growth throughout 2022, affecting numerous companies in the process. Despite these obstacles, there is fierce pricing competition. Toyota expects the fiscal year to see strong overall growth, but in response to the chip shortage and increased price competition in the EV market, the company is strategically refocusing on hybrid vehicles. This move enables Toyota to continue meeting its overall sales targets while reducing some of the uncertainties and difficulties brought on by the semiconductor shortage. Nevertheless, even though the business projects sell in about 9.6 million cars this fiscal year, the global shortage of semiconductors has essentially forced automakers like Toyota to reassess their expectations for EV sales and adopt alternative strategies to navigate these difficult market conditions, which could have a significant impact on the EV landscape and possibly further solidify Tesla's dominance in the market. Is just one of the major factors forcing some automakers to reevaluate their EV sales projections. The ongoing pandemic has caused widespread shipping delays, which have had two effects. They have increased shipping costs and the risks associated with transporting vehicles across different parts of the world. As a result, some major players in the industry have been forced to make strategic adjustments. For example, Ford has been hit with deferred EV manufacturing investments totaling about $12 billion, which has caused a one-year delay in its ambitious goal of reaching 600 EV production units. In a similar vein, General Motors has chosen to delay the production of specific EV models in order to protect its pricing strategies in the face of these logistical difficulties. It's important to understand that aside from Tesla, the majority of other EV manufacturers are also suffering from declining prices. For example, Ford recently said that it was pulling back its full-year results prediction, citing ongoing pressure on electric vehicles. During Ford's second quarter earnings briefing in July, CEO Jim Farley revealed the company's plans to slow the expansion of money-losing EVs while redirecting resources towards the commercial vehicle segment and expanding sales of gas-electric hybrids over the next 5 years. Surprisingly, the company reportedly incurred losses estimated at $36,000 per each of the 360,000 electric vehicles it delivered to dealers in the third quarter, surpassing the $3,235 losses per EV experienced in the preceding quarter. The limited battery production capacity, a crucial factor that greatly affects the availability and affordability of EVs battery manufacturers like Panasonic and LG, is a third factor that has led to the revision of the EV sales forecast. Energy Solution has warned of an impending slowdown in the EV market because of the shortage of battery supply and rising raw material costs. Because of these battery issues, several automakers, including Honda, have given up on their intentions to work with partners like GM to build affordable EVs. Why does this matter for Tesla, though? Tesla has shown resilience by coming up with creative ways to overcome the obstacles posed by its competitors. For instance, the company has proactively sourced alternative chips and modified its software to lessen the impact of chip shortages on production. Additionally, Tesla has used its global network of factories and suppliers in conjunction with its direct sales model to streamline shipping logistics, cut costs, and expedite vehicle deliveries to consumers. The fact that several automakers are cutting their EV sales forecast presents a significant opportunity for Tesla to increase its market share and further solidify its leadership position in the EV industry. Tesla has maintained strong performance and sustained growth momentum in the EV market by taking proactive steps to secure its battery supply and reduce costs through in-house technology development and strategic partnerships with battery manufacturers like CATL and Panasonic. As a result, Tesla has set records by selling over 57,000 battery electric vehicles in the first half of 2023, accounting for more than half of total BV sales in the US. Despite fierce competition, the business has also grown its market share in important areas like China and Europe. But Tesla's accomplishments go beyond American borders. On a worldwide basis, the business has made notable progress despite intense rivalry from both domestic and international rivals, especially in important areas like China and Europe. In China, where the automotive industry is very competitive and diverse, Tesla has been able to establish a growing market share. Tesla has established itself as a major force. Its alluring goods. The brand has reached incredible heights thanks to innovative technology and an unwavering dedication to customer satisfaction. This has not only cemented Tesla's position as a powerful force in the Chinese EV market, but also shown that it can adapt and thrive in a variety of difficult market conditions. Similarly, in Europe, where automotive traditions and preferences differ from nation to nation, Tesla has succeeded by combining performance, sustainability, and cutting-edge features. Due to Tesla's ability to connect with and win over European customers, the company's market share is increasing, solidifying its global presence. Tesla's success is a monument to innovation, tenacity, and an unwavering pursuit of excellence rather than merely a collection of numbers. It represents the dramatic changes taking place in the automotive sector, as well as the larger shift in consumer consciousness towards sustainable mobility. By lowering their EV sales projections, Tesla's ability to not only endure, but also thrive in the face of these obstacles demonstrates its agility and dedication to redefine what is feasible in the electric car industry. As other companies continue to lower their forecasts and produce fewer EVs, rival manufacturers unintentionally improve Tesla's reputation and brand value in the EV market. This strategic move helps Tesla to take advantage of the growing consumer demand for EVs and closes the gap with its rivals. So, in conclusion, Tesla may increase its market share by utilizing its manufacturing quality, design, performance, and customer satisfaction. By utilizing its advantages and taking advantage of the competition, Tesla stands to gain a great deal from other automakers' decisions to reduce their EV sales forecasts. As we wrap up this discussion, we'd love to hear your thoughts. Global semiconductor shortages, shipping delays caused by the pandemic, and limited battery production capacity have forced several auto companies to lower their EV sales forecasts. While these challenges have affected many players in the field, Tesla stands out as a resilient and innovative force, ready to capitalize on the changing dynamics of the market. Therefore, Tesla can further solidify its position as a dominant player in the EV industry. For more information on Tesla and the always changing world of electric vehicles, check how you think the company can further capitalize on this chance to solidify its place in the EV market. How much do you think its stock is worth? And do you think it will continue to rise? Make sure to enjoy this video. Additionally, please subscribe to Tesla Stock News. We appreciate your participation today and hope to see you in the upcoming video.